You are listening to ChartingWealth.com for Friday, Veterans Day, November the 11th, 2016. Congratulations, all veterans. I'm one myself, served proudly in the United States Marine Corps. Hoorah! Let's jump into this market. What do we see going on? We had a crossover on the total market on the 10th on the two-day chart, which ended being drawn on the 10th. This is our two-day candlestick. We have a huge up movement in that candlestick, about the same height as the candlestick itself in a tall wick. Lots of strong upward pressure. We don't have the derivative oscillator crossing over yet, but the MACD or the PPO, the price percent oscillator, which is the MACD, just using percentage price instead of the dollars. It just means that you can transfer that usage across the board when comparing with other equities. It's just a little more helpful. What do we see going on? We have two-day candles going up. Strong up movement. Actually, the market closed above the weekly trend line on this latest two-day chart. Market was up 0.28%, so just a little over 0.25%, but that is the total market. If we look at what happened on the 4-hour chart, that is the intraday movement, up movement in the morning, pairing off some in the afternoon, open red box candle in the afternoon, still up movement, and we have a change in our trend. So what we need to be able to try to find to do tomorrow, once a new candle starts forming, is draw ourselves a new trend line. We can, in fact, since we already have a crossover, we can go ahead and try to at least start forming one. Again, those who ask about when and how you draw trend lines, I don't like to start drawing the trend line really until the crossover occurs and then starting after the crossover. So we'll draw it a little premature on this chart for now. What do we see? Of course, the movement is well above our new two-day trend line. That is on the total market. Now let's go back to our two-day chart. Take a look at the S&P 500. It was not up quite as much as the total market, up just 0.25% instead of 0.28%. Looks very similar as far as the candlesticks go. Two big up candlesticks, crossover going up on this latest two-day candlestick. And like the other trend line, we can actually redraw our two-day trend line. What I love so much, for those of you who are listening by audio, I just very quickly redrew our trend line. Freestockcharts.com and then their paid site, TC2000. Phenomenal. I used to pay hundreds of dollars a month to get a crappy proprietary thing. I had to gin my computer up. I could only use one computer. It wasn't a net-based program. This is so incredible. Internet-based. It's just an app. It is fabulous. Just absolutely wonderful. If you don't have Free Stock Charts or TC2000, you need it. Now remember, all of our subscribers, you get the link to the layout that we actually use if you sign up for our newsletter at chartingwealth.com. You also get our How to Read a Stock Chart video, a link to that, and you also get our daily market worksheet, which is what you should be filling out as you're listening to me right now. All right, if we look intraday, what do we see on the S&P 500? We see lots of up movement. Charts crossed over going up all the way back on Monday the 7th, and we've just had continual big movement up on the S&P 500 like we saw in the total market now, and we're just waiting for that rollback to end so that there is an actual pullback, and then you can jump in safely and find an entry point. But jumping in just when the market's driving up is always fraught with peril, because inevitably you buy at the wrong spot. We want to wait till there's a rollback going in the opposite direction of the big chart and then turn around and jump in. Want to know more about that? Listen to our How to Read a Stock Chart video that you get when you sign up for our daily newsletter for free. Okay, now let's go to a completely different scenario. The Qs, that is the NASDAQ 100, down strong for the day, whereas the total market and the S&P 500 up around 0.25%. The Qs was down 1.61%. Just amazing down movement. As reflected in our two-day chart, Actually, again, that reflects 2 days worth of movement. We have a massive doji. We've got a huge wick on the top, a huge wick on the bottom, and hardly any movement throughout the course of the 2 days between the opening and the closing, meaning that all that opening was lost. And so we have lots of indecision. What are we seeing as far as some signs go? Well, the PPO, which is our strongest indicator, is actually kinked over going down along with the signal line. Derivative oscillators lost some of its downward momentum. But again, lots of indecision right now in the cues. If we look intraday for a little more to figure out what's going on, we can see where there was a doji on Wednesday morning, the 9th, lots of indecision there following the election, some up movement in the afternoon, and then all that paired off throughout the course of the day on Thursday. Going into Friday, it does look like the 4-hour chart is getting close to crossing over going down, but it has not occurred yet. So again, still in a confirmed down move on the 2-day chart, and the 4-hour chart is still in an up move. But again, confirmed down move on both the weekly and the 2-day chart when it comes to the NASDAQ 100 or QQQ, or the cubes as some people call it. Now, lastly, take a look at gold. Gold down 1.49%. Not as much over the day as the Qs, close to it. But gold has not yet crossed over going down, still in a confirmed up move on the big chart. However, the double big chart, the weekly chart, is of course still in a confirmed down move on gold. Now, what's our real trading chart when it comes to gold? It's that 4-hour chart. And remember, folks, it crossed over going down back on the 7th in the afternoon, Monday the 7th. Had a little bit of a pop-up in the morning with all the exuberance after the Trump victory, and then gold rolled back over going down. So those of you who rode through that election, which you were not supposed to do, have ended up being okay as far as down moves on gold goes. But again, we don't recommend that. When you have big things happening with the Fed, you have big things happening in elections, you don't stay in the market and risk getting hammered because you just can't tell which way it's going to go. That is where we are as we've gotten to the end of the day on Thursday as we get ready to go into Friday the 11th. We hope that you are doing great, that things are going well for you. We so appreciate you being with us. We always enjoy being with you. The markets are just fascinating and fun, and we will continue to do all that we can to provide information to you so that you do enjoy these markets and are able to figure out exactly what is happening. Thanks so much for being with us. God bless from chartingwealth.com.